Welcome to Cattle Call, an original production of the Nebraska Rural Radio Association. I'm Chad Moyer. Cattle Call is brought to you by Wolf Auto, Small Town Strong. Check out their website. Take a look at the inventory. We thank them for their sponsorship of today's program. Once again, Brad Kooima and Varilek at Sioux Center, Iowa, joins us for today's program. And boy, Brad, do we have a couple of things to talk about or what? Just a number of things in the cattle market the last week. We had a cattle on feed report, reached a market in some, reached a high water mark in some data that you tend to look at. But I think we need to start with that Tyson announcement. You and I had talked about the ability of this cattle market to get through the situation we're in, try and avoid losing shackle space. And then Tyson made an announcement on Friday, huh?
100%, Chad. I think you hit the nail on the head. Thanks for having me on. And boy, one of these weeks, I'm hoping that you and I can go like, well, a little quieter this week, or up $1, or we're down $1, and instead of the kind of volatility that we've had. I couldn't help but be struck by your lead in here with the plant closure in Lexington. When I heard that news on Friday afternoon, the first thing I thought of was I remembered very clearly that Cargill closed a plant in Plainview, Texas, a number of years ago. Thank goodness for Google search, right? I couldn't remember exactly when, but I'm gonna lead with this because I think there's a couple of significant points to it. One would be that, well, the date that they announced that closure, which was a absolute out of the blue, complete surprise, similar to what the Lexington news was January 16 of 2013. So whether you were feeding cattle or doing broadcasting about cattle or not in 14, if you weren't, 14 was a huge bull market year because of tight supply, because you'd had drought in 12 and 13, 11 and 12 actually, and then they started to rebuild the herd a little bit. Anyway, so that time, one of these majors, almost like they anticipated it, we're intentional about, hey, we can see that the numbers are really going to be tight next year. And so they went ahead and took, we're very proactive and closed the plant early. So is that a little bit of the story? Maybe. A second thing I wanted to mention about that, as I researched that, well, what happened last time type of a, autopsy report of the Plainview plant closing. We sold off. I'll give you an idea. I can already say this with a straight face. We were at 132.70. We settled fed cattle that day, the day that they made the announcement. And then we proceeded to go down to 127.60, $5.10. Whoopie ding compared to today. Took us 3 weeks to do it that time too. Monday, if you were on Mars, we went down $7.25 in 1 second and never budged really, so with the volatility that we have now compared to then, it's hard to even compare apples to apples here, but that's what we did the last time. Market tried to rally that time, then we ended up selling off some more after that before going all the way into the next year before we started the big bull market then in the spring of 2014. So it's been happened before. The other time we closed one was August of 15, then one of Tyson's plants in Denison, Iowa, not very far from us, closed. That one did not have the fanfare and was largely telegraphed ahead of it, so it didn't quite have the market action. So anyway, that's where we're at. I do find it just a little bit curious that why now when the packer margins are really good, and why there, where record numbers of cattle on feed in Nebraska, but there's obviously must be some good reasons for it.
Yeah. Well, and just kind of putting this announcement into perspective, because there are some things we had talked about it before. There's some small and medium-sized operations that are up and running, including one that's not far from Lexington in North Platte. Is it big enough to offset itself, or what's really the situation slaughter-wise as we sit now?
Thank you. That's a good question. Okay, so the Lexington plant was rated as having daily capacity of 4,400, Chad. I don't think that they'd killed 4,400 in quite a long time. In fact, I'm told by sources very close that they'd been killing around 36 to 3,700 a day. Okay. North Platte, the new plant, sustainable beef, is killing 1,100 a day. and expected to gear up after New Year to 1,500 a day. So now, instead of this, I've heard some people say, well, it's 7% of the slaughter capacity. That's not the case, in my opinion. I think you're going to have other packers pick up a little bit of the slack here and there too. And to put it in perspective, so 3,700, 1,100, we're talking about, we got to make up for 2,600 a day, which, yeah, that's something, but I mean, it's not an overwhelming number in my estimation, particularly when you parallel that with the fact that year-to-date slaughter of steers and heifers, year-to-date, now it's middle of November, so this isn't just a little bit of a database, is down 7.4%. Why did they close a plant? Because there isn't enough cattle to go around. That's why, and so if they move the needle 3 or 4%, we're still looking at it going to be a deal where there's still more cattle, or there's still more shackle spaces than there are cattle, at least in the short term. Albeit, when you wreck a market psychology and when you chase the long speculator, like some of these events, whether it's been the narrative out of Washington about beef too high, or worried about a tariff coming off in Brazil, or the fact that the cash market has gone down $15 in 3 weeks, that's a little bit of a problem, so there are some issues here within the market, but I really don't think that. Do I think that's a game changer? It shouldn't be, given the overall supply of the cattle.
Okay. Let's come back and talk to something that you mentioned too, and that would be the cattle on feed report that we got on Friday, because there's quarterly data in there. We're wondering about herd expansion amid what's going on in the cattle market now. So I guess as you looked at the data that they did release, what stands out for you for the cattle on feed report?
That's a good question. Just generally speaking, the report would have been a little bit friendly because the placement number was below expectations, but it disappeared in the news with the plant closure news. But yeah, the thing that I think a lot of us are wondering about, and to your question, the thing that I thought was the most interesting, when you take a look at the data dump there, and then also the actual slaughter dump that we look at carefully, we're, in my opinion, just to give you some boring statistics, so the steer slaughter's down, the heifer slaughter's down, right? But the thing that you got to really look at it granularly, I think, is what is the heifers as a percentage of the steers, and is that starting to shift, right? Okay, the last data I got, we were at 38% steers to heifer ratio. Give you some perspective, a year ago this week was 41, year before that it was 42. You might be wondering, well, what about with the good old days, like in 2015 when we flipped a switch and expanded like crazy? Then we had like 33% versus 38% the year before. So to summarize it, I guess, if this is boring data, I'm sorry, but I would say, are we doing some heifer retention? Yes. Is it like dramatic? Not at all, but it's some. So we're moving the needle some, and I would say it's largely in the north, the Dakotas, not so much in the south or the southeast, but I think we're moving the needle slowly towards some very slow heifer retention.
All right. Let's go ahead and hit on a question that we had posed by our listeners and viewers here. If we can go ahead and put that one up. And again, it kind of goes back to, okay, what do we do in these situations? A lot of movement and things like that. If a feeder loses money one year, does that mean the following year it's a good time for a cow-calf operator to feed out their own calves? Could you, I guess, I don't have the context around this question, but why is a question like this kind of relevant right now? And then I guess your response to that question.
It's an interesting question. I've had fun thinking about it this morning. I've even got a bunch of notes taken, believe it or not. And I think I'm understanding the question, at least what I think of is, okay, so I'm 67 years old. I started feeding cattle when I was 16 years old with my dad. And I can remember my dad would tell me that, well, if you sell a bunch of cattle at a loss, you make sure you get right back to the sale barn and buy cattle, because, the theory was if the live cattle were lower, then your feeder cattle replacements were going to be lower, give you that much more of a chance to make money back in the next turn. For the good old days. I'll give you my own personal experience. Okay. So after the 14 rally and then the 15 debacle, when we overfed cattle and didn't get current, and it was a wreck, right? I went from the 3rd of May, and I'm a hedger, but you never have enough hedges on. So without the hedge money, I went from the 3rd of May of 2015 personally to the last month of December of 2016 17 consecutive months with not a single winner. Had some hedges on that helped, but if you had to just go cash for cash, now, so you can look at that, well, turn right around and buy them cheap. Well, that was an absolute train wreck in that kind of a market. Okay. And unfortunately, now that you've got all these extremes like we've got now, and then all the outside volatility of, well, yeah, if it was just based on supply, we can all be bullish. But guess what? Now, feeder cattle just went down $80 a hundred on January feeders, 80. So to this guy's question, you're looking at a situation. Let's say, let's say hypothetically, this guy bought your yearlings this summer and they break at 250. The odds of those making money right now look to be grim, right? Slim and none, and Slim just left out. But so does that mean that you should feed them out next year? I would suppose the law of averages would say that, well, maybe it would be better. Maybe that will create more demand. Maybe that will. But, I really don't think that that's the cycle we're in on the cattle. I think if we start to have this retention, start to build expansion, we're going to go into a period of where there's a little more supply again. So, there's an old saying in the business, plan the trade, trade the plan. And usually when I get these kind of questions from producers who are looking to deviate from their old ways, I'd say, don't ride last year's horse in this year's race. Do what you always do. If this is your program, stick to your program. Better chance that works over time as to be bouncing around. I'm going to finish these cattle this year. You probably don't know much about how to do that. Just not being rude, but I mean, or either you make yearlings or you sell them as calves, or you do what I do and you feed them out. I don't think deviating from the thing is a great idea.
All right. Well, we've kind of got to that point in the program here now where we're just kind of, obviously it's a holiday week, right? And there's never anything normal about a holiday week. But I guess going into December, kind of what are your thoughts? We had so many headlines to go over the last few weeks. There is no normal. But I guess what is kind of the take-home message amid all of these headlines that we've had here recently? What do you want to leave folks with this week?
Fair enough. I wish I was going to be just a little more enjoyable to listen to. It's always more fun to be bullish, Chad. I'm just not feeling it quite here. There's a couple things that I'm worried about. One is that lack of currentness with the average weights and we talked about that a little bit. Now, I don't think it's Mount Everest. I think we're at the end of a calf crop. It's not the 1st of August where we're going into all these farmer fit calves. It's the middle of November and we're going out of them, and behind these cattle are very little. But we still got to work through it. You've got the seasonal bugaboo where it often takes until about the second week or first full week of December anyway, which isn't very far away. If we get aggressive, if we'd see a pickup in the kill slaughter, the pace, if you'd see a couple of these other plants picking up some extra hours to make up for anticipation of maybe losing some other places, or keying off the greed factor where these packers are making a pretty nice chunk of money right now. I assume that domestic demand is going to stay like it's been, and that it's been very, very good. So as we move next toward the holiday period where we feature the middle meats and stuff, the expensive stuff, I think that all can still come into play. So we need to move some cattle. We need to see an increase in slaughter. I worry about the weights and what we're going to do with these high break evens. If we're not at those prices when we get there, that's going to have a tendency the temptation is going to be to feed it. And the other gorilla in the room, Chad, maintains and still is the same old one. And tell us what we're going to do about the Mexican border in clear terms, so we can get that assimilated into the marketplace. And yes, I don't think that's going to create any more cattle for January, February. I agree, but it's a thing that factors into the psychology of the futures market.
Yep, maybe even beyond that too. We just don't have that solid signal that heifer retention is happening yet, and so
right.
we're kind of waiting on that a little bit longer term yet too, aren't we?
And uncertainty is bearish. If you're wondering, nobody's going to talk me out of that. I like to be bullish. I think the numbers will get tight again next year, but uncertainty right now seems to be the main thing. So be careful. Hopefully you've got some protection on here after this last break, but we just had a huge sell-off, Chad. $80 a hundred on January feeders. I mean, $44 on fed cattle. Hopefully, today's action is a little responsive to that, where we're catching a nice little bounce. Hopefully we can drag that a little farther into next week.
All right. Brad, for folks that'd like to reach out, certainly love to talk to them, right?
Call us. That's the best way. There's the number, 712-722-0023. There's 4 brokers here. We'd love to see if we can help you, at least listen to what we can do to try to help with what you're asking about.
All right. Very good. Thank you, Brad. I appreciate the insight and the expertise. Again, that's Brad Kooima from Kooima and Varilek at Sioux Center, Iowa, as we talk about some of the things going on in this week's cattle call in the cattle industry. Again, the cattle call is brought to you by Wolf Auto, Small Town Strong. Again, their website right there, wolfauto.com. Have a great week. Happy Thanksgiving to you and your family, and we'll catch you up on next week's cattle call.
Thanks, Chad.